I don't think there's going to be anything which is going to come in for the conventional auto stuff. If at all it will any measure, it would still be to kind of in a way propel the EV space and ensure that we move faster towards basically green energy and decarbonization. So I think on the EV side, you could still have further rebates and all of that, but I don't think otherwise anything specifically can come in for the auto side. The other area can be maybe how do you still further push exports of auto? I mean, we've already demonstrated, I think both Maruti Suzuki, Hyundai all have become big organizations which are exporting. But I think how do you get more players to come in, set up specialized export zones for auto itself? I think that could be an area that one can look forward to.
All right. Let's bring in Sanjay Dutt also, who's joining in. He's Director, Quantum Securities. Sanjay, great to have you with us here as always. Important day, big day. And how big, of course, is something I think we'll find out in a couple of hours from now. But what is your sense, Sanjay? Can the budgets in the past, I mean, it's not always consistent, but they have proven to be a bit of a turning point for markets. Do you think this one could be one of those? Markets have been selling off coming into this one over the last 2 weeks or so. Your thoughts?
I think we can't hear Sanjay.
Sanjay, I think you're on mute. You'll have to unmute yourself. I think we still have a little bit of issue there in terms of the audio. We'll fix that and come back. Nilesh, this entire saga, I mean, the last couple of sort of days of sell-off that we've seen, is this episode finally firmly behind, or you think there are issues which will linger?
So there will be cross-divergence of two flows. One, active foreign investors are finding many cheaper markets like China, Brazil, South Africa, Mexico. Short-term tactical money will move out of India to those cheaper markets. The long-term strategic money, like the private equity venture capital, same way there are patient money in listed market also. They'll continue to do bargain hunting in India on correction. The second thing is the passive flows. As US interest rates start speaking out, the flow towards emerging market will start. And India will get 14% of MSCI emerging market flows. So we will see active FPIs selling because of valuation, but passive FPIs and long-term FPIs buying in the market.
Okay. By the way, the FMCG space is the one that's really surging right now. Britannia is your top Nifty gainer, up almost about 3% and a lot of these rural-focused, spaces in the broader markets also doing pretty well. Chola Investment we spoke about, Shriram Finance, something like a Star Health, just watch out for these names. In fact, Sanjay,
I'll tell you, probably for the FMCG space, there is some report by the PMEAC. Which is arguing for a universal basic income, basically, promote consumption at the bottom of the pyramid. So perhaps there is some hope that there's some income transfer program. It's possible that that's working its magic. Okay. FMCGs, Nilesh?
Yeah, I think FMCG looks good, especially after the kind of underperformance or the price declines that we have seen over the last 1 year or so. A lot of them are probably off 20-30% from their highs. The challenge still is in terms of the demand. The demand is still kind of mid-single digit. That's what it has been. But I still think that, a couple of years back when other engines of the markets were not firing, they clearly, obviously, were right there on top. But today, they have to compete with spaces like capital goods, railways, defense, specialized lenders, banks, which are all growing at 20-25% in terms of their earnings. And that, I think, becomes a challenge from an allocation point of view. So maybe, yes, 5 years, 8 years, the long-term India consumption story is pretty much intact. It's structural in nature. But I think for a few more quarters, they could probably at best be market performers.
Okay, specialized lenders look so much better than NBFC.
By the way, I just wanted to mention that the Sensex is now back above 60,000 and it's the highest point of trade for the Nifty. Poetic perhaps as we head into the biggest day of the financial calendar. Good going on the market, 130 points higher. In fact, just stay on, Sanjay Dutt I think is joining in as well. Sanjay, if you can hear us now, the discussion is on rural wage growth, right, which has been, I think, declining for 3 years in a row. So Nilesh was just telling us that perhaps something can be done to ease the burden financially for a lot of the rural part of the market, maybe MSMEs, give them easier loans, etc. What are you expecting? What could the government do to boost consumption in the lower end of the pyramid?
I really couldn't add much on what's been talked about the budget, what the government can do. We're just an hour or so away. But the fact is that, giving whatever incentives possible to the lower middle class, enhancing consumption, because I think the biggest incentive you can probably give is to increase infrastructure spending, because that is a dual impact. You go down across the hinterland and you create more infrastructure. India still needs infrastructure. You create jobs. You obviously improve productivity. That's, I think, the simplest way and the most productive way to do it than just doling out subsidies or anything to improve rural consumption. But I think all this is probably sealed and already coming our way. But on a broader issue, I think the markets are on a consolidation phase right now. They would remain so over the next 6 odd months. But there are select opportunities that you may find in the B group stocks, in the second rung stocks where I think they're much better placed. But larger stocks are more or less, got all the positives in the price for FY24 and some even FY25.
So Sanjay, you're sounding a little cautious overall, right? So irrespective of whatever comes out of the budget, the market may stay a little ranged, even drift lower. Is that the view?
I think so, because I think from the larger caps perspective, we've got all the positives in there. And I don't see anything that's going to give us leadership to take the Nifty up by another 1,500 points, because then we'll be stretched compared to the other emerging markets, as what Nilesh was saying, that, we ultimately have to be part of the EM flows. And there are markets which are much more attractive compared to us. We've outperformed last year. So therefore, we need the earnings to catch up, which obviously will take time. For India's story, long term is intact. But talking about the immediate 3-6 months, I think we may take time on the indices. But within the market, in the lower end of the market, you may find opportunity.
There was a lot of attraction for chemical companies. We used to talk about them a great deal a couple of years back. Has that theme played out? You, Nilesh, first.
So one is business point of view, other is market point of view. Business point of view, they are like the generic pharma or IT sector. India's market share in global chemical markets will continue to grow, and we will become a dominant player, just like we are in generic pharma or IT. Now, from a stock market point of view, we were discounting probably 10 years of earnings in chemical sector at one point of time. So there was a need to take a little bit of breather, let fundamentals catch up with prices, and then again make the move ahead. So business-wise, no problem. Chemical sector will do very well. Stock price point of view, there is a need to catch the breather and let fundamentals catch up with the valuation.
No, I say,
Nilesh, of Envision, do you also play, the railway stocks, the defense stocks? Are these themes that you concentrate on?
Oh, absolutely. I mean, this is clearly one of our big focus areas. And what we're seeing is some really solid traction. I mean, traction in terms of the order books that they are seeing, or the funnel, the pipeline, the kind of areas which the government is going to open up for the private sector. So I think this is a huge area and a huge focus area for us.
How do you do that, Nilesh? Which
Sanjay.
names? What kind of names?
So we've been owning a basket of both the PSU pack as well as the private, especially on the defense side. There are some really high quality PSU names. And because they have pretty much an embedded entitlement, which means that if there is a company making missiles, there's not going to be any other company which is going to start making missiles. It's going to remain within their privy, within...
But defense, not railways, or railways as well.
In railways, I don't think there's any PSU out there. They're all private names. There are companies which make wagons. And then there are proxy plays. So we earlier talked about CG Power, how they are kind of doing. There's an auto component company which we own called Gabriel, which also kind of makes their products for the railways. So you could play it that way as well. So it's a combination of the way you play it. Some which are dedicated plays and some which are kind of a mixed plays.
Sanjay,
it has
a similar question to you, actually, since you started off by saying, infrastructure. How are you playing that theme? Are you also, like Nilesh was saying, railway stocks, railway parts makers? What do you mean when you say infrastructure?
Was that for me?
Yes, Sanjay, for you.
Okay. What I think is that a lot of companies which are involved in contracting, construction, haven't performed in the last 5 to 7 years. And if you're talking about capex spend in the budget, we're talking about creation of getting back the private consumption side, private capex cycle, etc. I would look at companies like, SKF, Carborundum Universal, or other companies like, maybe the IRB infrastructure at the right price. So these are the kind of companies which I think will get orders both on the base of the manufacturing as well as the infrastructure spend. Of course, cement is a very obvious play and a direct. Contrary to most people, I'm still bullish on metals this year. And I continue to have positions there. And I think we are set for a good metals rally. But there's only one point, Lata, that I want to make very important for retail investors. That the theme over the next 12 to 18 months is going to be value investing, and is not going to be those high-priced, high-earning multiples, the go-go, high-growth kind of investing. So we need to go back and understand that we need to look at lower multiples, lower price to sales, lower price to earnings. Those are the companies where we'll stand protected, and not the companies that we've got used to in the last 2 years. Like, there's no logic for a chemical company who's pure generic, doing not much, to get a multiple of 25, 30, 40. I belong to the old school of thought. So therefore, I think people have to realize that as to what you're paying actually, and what are you going to get in the next 2 to 3 years.
So what would when you say value stocks, PSU banks, L&T, Tata Power, those kinds of things?
I'll give you 2 boring names which I own, and of course not recommending them, but I think they're really worth looking at right now. GAIL, IOC. We talk about ethanol. Where is ultimately ethanol going to be sold? Ultimately, it's going to be sold at the IOC pumps or the BPCL pumps. IOC trades below book value, trades something like 6 or 7 times cash to EV, not price earning multiple, cash to EV. Now people will turn around and say, oh, boring, PSU, nothing happens, blah, blah, blah. But we said the same thing about Mazagon Dock and Hindustan Aeronautics, etc., just 2 years back, and all the rail companies. And suddenly everyone's chasing rail, defense, those kind of things. These themes develop in the market, but you want to understand as to patiently when to buy them. When buy them when no one was to buy them. GAIL has the biggest gas infrastructure in the country. You can't do any manufacturing in India without gas. You can't do anything without gas. And no private gas player can do without GAIL. So do your homework. These are just 2 ideas that came to my mind. I like boring stuff. I buy when no one wants to buy.
Sanjay, it might seem boring on paper, but on this ethanol theme, I mean, we were speaking with Dwarikesh Sugar yesterday, and they told us that from around 5 crore litres last year, they'll do 7.5 crore litres this year, and 10 crore litres of ethanol sales next year. So this is a theme which is really picking up. I mean, not boring at all, to say the least. Yeah.
My point is, where will that ethanol be sold, that 7.5 crore litre? Yeah. Ultimately, it has to be blended with fuel and sold. No?
Sanjay, just sorry, but is it fair to kind of juxtapose sectors like defense and their PSUs? That's the commonality, but very different spaces, right? Defense is one area where the government is pushing indigenization, make in India. Nothing of that sort happening with oil and gas. You mentioned IOC, and hence I'm picking that point. This is also a year in which you have 7, 8 big state elections. Next year is general elections. It may be sort of unloved right now, and that it's got that going for it. But beyond that, what else, Sanjay?
They've got such a large distribution network. Can you discount that? People give me examples of Warren Buffett. Can you tell me why Warren Buffett is buying Chevron in the US for the last 5 years? I'm not saying that, the same parallel. But the question is, company with hard assets, cash flows, distribution networks, brand, they're not going to go away. They'll ultimately evolve into new models, And so you have to look at them when no one wants to buy them. You can be wrong of them. So therefore, that's the reason why we've all been taught the fundamental lesson of investing. Stop losses. Buy something, even if it goes down 30%, your hypothesis is wrong, get out of it. But big money multiples are only made when you buy something which is boring but has inherent value and has inherent staying power in the economy. So once again, I'm not advocating IOC. It fits into my frame of investing. GAIL, my frame of investing. A lot of people like momentum. A lot of people like different kind of way of doing. A lot of people don't like PSUs at all. But now look at the PSU bank. No one wanted to look at them. I was the one who talked about PSU banks 2 years back. I was the one who talked about Steel 3 years back.
But that's why I gave you that half volley. I told you PSU banks, and I was hoping you will loft it for a 6. I know that you've been a champion, and their day has definitely come under the sun. Well, IOC and BPCL, those kinds of companies will also be looking for getting reimbursed for some of the losses that they've suffered. They've sold below price. So that is something which we will know in the budget. It's clearly a budget play at this point in time, a binary. As well, there is some talk now of, this take or pay agreement that IOCL has entered into with one of the Adani companies, and it may have to pay up. So today there is a bit of red on those stocks. But I think we have kept you all for a goodish bit, and it's been most helpful. Thank you very much, Nilesh and Nilesh, for preparing us. And let's see if...
Thanks very much, guys.
Thank you.
Thank you.
Thank you so much.
Let's see what the budget delivers. Sanjay, just a last word from you. You spoke about this a PSU kind of stocks. Is there anything else that you have your eyes focused on? I mean, outside that, IT, finance, any other kind of stocks, FMCG?
I think a lot of capex related around the capex theme, manufacturing and capex theme, there are a large number of players. Like I mentioned, one or two, like a carborundum. I own carborundum. Similarly, there are many companies like these who provide inputs to various industries, which we ignore. Some graphite players, maybe. I'm not saying I don't own any graphite players, but I'm just giving you a broad example as to what you can look at. So if you're, really talking about the India manufacturing theme, anyone who's providing both consumable and non-consumable manufacturing inputs is really going to do big business in the next 2 years. And a lot of the stuff is available at much cheaper multiples than the fancy names we all look at. And similarly, in the auto ancillary space, people who export, people who are domestic suppliers are available at very attractive valuations. It's just that one needs to do work and one needs to buy stuff when it's not on a go-go phase, not in a fancy. We guys normally get dragged in with whatever is happening in the market. We want to ride the, theme that's running, and then we normally end up buying at the wrong time. But that time needs a lot of hard work.
Yeah.
Prashant, we were discussing shipping last time, shipbuilders. When I mentioned there was just $4 billion of the entire shipbuilding and ship repairing industry.
Yeah.
And look, in 6 months' time, we're at the likes of Mazagon Dock and Cochin Shipyard are.
Yeah.
So, this is the kind of stuff you need to look around for.
No, absolutely. I completely agree. And my only point with oil marketing is, I used to track it at one point, maybe in 2004, 2005 for a few years. It's a... it's a complicated sector, first of all, and second, it's also very politically sensitive, right? That's all the point I was making. But I take all your points, which you got to buy when no one wants to buy it. That's the,
Ultimately, Hindustan Aeronautics and Hindustan, Bharat Dynamics are happening.
Yeah.
So.
Got it. Sanjay, it's always a pleasure. Thank you so much for joining us and running us through what you're making of things.